Good morning, everyone, and thank you, Kat, for that introduction. I'm absolutely delighted to have been asked to moderate this really topical subject of how financial service sector lead on ESG, and absolutely sits right at the heart of driving purposeful change, which I think the conversations today are going to be all about. I am joined by an illustrious panel, which Kat has introduced on my behalf. We've got Alexis, Andrew, Timo, and Gordon. I'm going to be working with each of them to walk us through some of the really topical issues that are surrounding this ESG agenda at the moment. And I think it's probably a question that's on every business's lips. It's certainly something as a business we've been looking at with a lot of rigour. And actually, whilst being a challenge, I think a real opportunity for businesses, which I hope we're going to be able to extract during the conversation. And in particular, from my perspective, as a sort of wrap-up session, be really interested to think about how the legal teams within businesses can help to lead and promote that ESG agenda within businesses and at board level. We'd really like to hear from you. I think there is an opportunity to ask questions, which we will moderate, and I'll try to bring into the conversation as we go. So please do type those in and we'll try and deal with as many of those as possible. To kick us off, though, I think just a huge question about the sort of value creation of ESG. So how is ESG going to evolve? And also, what is its actual role in creating value for us all within our respective businesses? And Timo, if you don't mind, I'm going to come to you first on that one. I know you've spoken passionately with me about it before, so if you want to kick us off, that would be great.
My pleasure, Vicky, and thanks to everyone that I could be here. I'm also glad to announce that I'm on the lawyers' awards panels for the European awards, and ESG criteria will also be taken into account for that, of course. I think, ESG is a fundamental topic, as you said, for all institutions, and it also plays a fundamental role in value creation. It all goes together in the end, I believe, with integrity, that at the basis of corporate sustainability, there is integrity meaning the compliance with formal rules, legal and financial, but also ethical values that go beyond the law, and employee values such as honesty, fairness, trustworthiness, reliability, and commitment to inclusion, of course. And I think, if you really want to have a purposeful business, if you want to have an inspired workforce that are happy to, commit and allocate their time to the work, then you need to focus on criteria which are indeed sustainable. In this pandemic, we have seen that ESG factors are becoming fundamentally important for all businesses aiming for corporate sustainability. And one aspect that really came to the forefront was that of digitalization. The pandemic showed that efforts of many corporates and also governmental institutions still leave room for improvement. And I think this is a main focus in many corporations and also the government to adapt quickly to that, also in schools to enable homeschooling for children. This is one necessity which came about in the middle of the COVID crisis. And also we need to focus on issues that go to combat climate change, and we need to find a business model that is as close as possible to climate neutrality while still being cost efficient. There are two distinct types of value creation through ESG implementation, I would say. Foremost, of course, incorporating the ESG factors can add direct value through an improved cost efficiency and higher employee motivation, as I said, and also an increased government funding. And the second type of value creation can also be categorized as indirect, whereby the company actually benefits from an improved consumer and investor perception of the company. And this can affect, of course, the cost of financing, return on equity, revenue growth, and so on. And I believe that we can confidently expect that both indirect and direct value-adding effects of ESG compliance will only strengthen in the years to come.
Thank you, Timo. That was a very full answer, and I particularly enjoyed the kind of direct and indirect value creation that you outlined. And I think, there's so many benefits that can evolve from getting this properly integrated. I'm just going to pick up on the word integrity and just ask any of the other panel members if they've just got something to say around that move from compliance into this ethical values that are sort of sitting at the heart of strategies and purpose across businesses. Does anyone want to add to Timo's contribution?
I think integrity, it's critical. And I think, look, integrity is important because it's the right thing to do. It's ethically the right thing to do. It's morally the right thing to do. But also it's commercially the right thing to do now as well, right? ESG is not just a nice to have or morally the right thing, but it's a competitive advantage. And customers, employees, they are all looking now in a post-pandemic world especially for products and services and organizations that can demonstrate they adhere to these ESG values. And so, you know, it's twofold here. It's the right thing from a kind of integrity, from a kind of moral point of view, but it's also the right thing from a commercial point of view, which is, let's be honest, a lot about what the financial services industry is about.
Absolutely, Alexis, absolutely. That's a really good point. Thank you. So that sort of commercial integrity just creeping into the conversation, which I think we'll hear a bit more about. And I think just hearing that increase in value and what it can add both indirectly and directly to a business, you know, one of the things I know businesses across the world are grappling with at the moment on this ESG agenda are the metrics and goals of measuring success of an ESG program, and that lack of standardization and a framework across various industries. And I know the financial services sector grappling with that itself. Gordon, when we had a conversation pre the session, you had some thoughts around metrics and goals. I just wondered whether you would be willing to share those with the audience. We lost Gordon. We may have lost Gordon.
I think it's sort of a two-pronged scene, particularly in the fixed income providers who, you know, are sort of similar to ratings agencies, which will give you a certification. ICMA, I'm sure as many of you know, have a sort of sustainability bond index. They also have criteria by which, you know, companies can issue green bonds or sustainability bonds. And I think that's pretty well trodden. People are pretty familiar with that. You've got a lot of issuers now who have issued green bonds as sustainable bonds. I think what's trickier is how you measure that against, you know, how much, you know, carbon is being reduced at a particular issuer, for example. So it's one thing for a lot of these companies who are issuing green bonds, but what is the ultimate impact that has? And so if you look at, like, you know, I deal mostly in equities, and so for asset managers and portfolio managers, there's something called the Net Zero Asset Manager Initiative. That's something like 100 asset managers have signed up to it. It's about $40 trillion in assets under management. And what they're trying to do is figure out, well, you know, not only do we want to be investing in companies that obviously have ESG credentials and assets that are ESG positive, but given how much, you know, capital there is to deploy, how can we really measure what we're doing and how our investments can, for example, you know, reduce carbon or get us on the path to net zero? And that's a little bit tougher because, you know, there aren't enough green bonds out there. There aren't enough electric bus companies or, you know, wind farm companies to invest in, to deploy all of that capital. So they've got to look at other things like, well, do the companies they invest in have a net zero strategy? How long is their net zero plan? Is it 5 years? Is it 10 years? Is it 20 years? And so there, I think they can start to try and measure a little bit for different assets they're going to go into, you know, what is the metric by which I think, okay, if I'm going to invest in Sainsbury's, what's their net zero policy? How long is that going to take? What are they doing to make sure that their, you know, ESG credentials are where they should be? And that, I think, will take a bit longer, but there are more and more initiatives. There are better ways to measure. People are coming up with different ideas about how you can actually, you know, make that impact and measure that impact. But it is, you know, it's a long game, and so it'll take some time.
Thanks, Gordon. Yeah, and I think that how we measure, where we get that data from, and as I said right at the beginning, the sort of standardization of that. So how do we get these sort of global standards, how we measure what that means? And maybe it doesn't matter. I mean, maybe a business forms its own from an integrity and commercial integrity point of view, as we were talking about earlier, forms its own view on what ethical standard it wants to engage. And I certainly think from an environmental point of view that moving capital allocation away from the high carbon intensity sectors is something that we're all going to look at, but as you say, not always as easily done as said. From a social point of view, I mean, you focus hugely there on the environmental. I just wonder if any one of the panelists wanted to talk about metrics around the sort of social, or Gordon, if you wanted to continue. But
I guess I would say just quickly, and then others should jump in. But I think one thing we're certainly seeing at the bank is a lot of our clients now are focused on, obviously, gender parity and making sure that when we pitch for business, we are often getting requirements now that we have to have, a certain number of women or diversity team members on that team, and they have to be, it's certainly not tokenism. You need to make sure that those people are going to be active on the file. They're going to be, front and center. They're going to be working a lot. They're going to be really integrated in the team. And I think you'll see more and more of that as time goes on in these companies. Again, try and measure how they can make a difference on the ESG side. They're going to require people who are providing services to them to make sure that they're also matching those ideals.
Yeah, I think that's right. And we're seeing the gender diversity point come more and more, and people put in more diverse teams, which is great. But another question is how do we measure that? How do we sustain that? How do we lead on that from a financial services sector point of view? Any other of the panelists that want to contribute on that? This is a big topic, I think, really, on the standardization types of metrics we'd use, because I think they're numerous. Any other thoughts?
Yeah, I mean, I think it's about the sort of gender diversity, social diversity within the organization, but then also thinking about the services you offer, how you pitch them, how you offer them, how you make them as inclusive as possible. So if you look at financial services products in general, there's an accept rate of 47% versus 61% for female to male, right? And at Liberis, our motto has always been around inclusive financing, right? So we actually have, I think, 84% women versus 82% accept rate for men. So I think there's going to be a lot more focus on inclusive financial services, and I guess marketing styles, explaining to audiences, etc. In a post-pandemic world where income is completely unpredictable, having a kind of very standardized affordability model isn't inclusive. So I think there's going to be a lot more emphasis on that moving forward, and I think the FCA will be coming down on that as well.
Yeah, I think that's inevitable, and I think regulation will get ever tougher on this. But I suppose it's being ahead of that and driving the purposeful changes we're talking about today. It's how we lead on that as an industry, and I certainly think the financial services industry are thinking hard about that and are having to do that. And the diversity, as you say, Alexis, the gender diversity is key, but there's all sorts of other minority groups that we need to be inclusive about, and again I think that's high up on very many of the business agendas going forward.
Yeah, if I could just add,
sure.
Victoria, I think on that point, just to your point about the regulators, I think that's very valid in the context of the social agenda. I think if you look at the UK and its focus on what will be its future taxonomy, I think you'll find that there will be a lot more emphasis on the social aspects as against, say, what the EU has initially produced in relation to the EU taxonomy. And I'm sure that will develop, but I certainly think the S in the ESG will evolve from a regulatory perspective via the taxonomies.
Yeah, and I think we can feel that, just the transparency that businesses are now giving on, pay levels and social equality policies, and how they are being more inclusive in recruitment and those sorts of things. I think are, we can see the evidence. But I agree. I think the regulator will be on this very, very well. He's already driving that agenda in the UK. Just moving us on slightly. I think this is an inevitable question. It's one of the questions that's been posed on the programme. So let's go there. And I think the answer to it is yes. But I suppose maybe how. And the question that we've been posed is whether ESG is becoming integral to financial performance within the financial services industry, and how businesses can then manage investor expectations. And I think it's more the how, because presumably, Andrew, I'm going to come to you. The first answer is going to be yes, it is integral to financial performance. But do you want to share some of your thoughts and thinking on that topic?
Yeah, thanks, Victoria. I agree, of course, yes. Just firstly, thanks to the lawyer for having me and for putting this panel together on this important subject. So much appreciated. Yes, absolutely, I think is the answer to that question. But I don't think it's just about investor expectations in relation to ESG. I think it's broader than that, and it's sort of wider stakeholder expectation. For example, regulators, employees, society at large, including NGOs, as well as shareholders, have a huge say in this. And that's kind of very relevant because stakeholder expectations have developed in leaps and bounds in relation to expectations regarding ESG. And more generally, the stakeholder view of companies is heavily impacted by whether companies have a credible sustainability strategy or actions to back that strategy. And as we move towards a form of regenerative capitalism, as it were, there's most certainly a following along the ESG path that really is combining the aspect of profit with purpose, such that organizations, including financial institutions, are now looking at not only sort of monetary value, but sort of the wider values to deliver to the wider stakeholders that I've mentioned. And there's strong evidence of other forms of value generation outside of just monetary valuation, boosting stakeholder confidence in companies. So that's proving to be a huge focus for I think financial institutions generally, but large corporates as well. Indeed, in relation to banks, I think banks are looking at ESG and climate risk as both a risk-related and opportunity-related issue, because ultimately society is starting to realize that there's no chance of us reaching net zero without finance. And so banks are really at the center of this. And I think ESG is already mainstream across financial services. And it's going to become even more all-pervasive across every aspect of financial services. And I think lawyers, in particular, in-house, and more broadly across the legal community, will be supporting various aspects of the growth of ESG across the banking industry, and will play a key part in the evolution of ESG, I think, in relation to both risks and opportunities that I've mentioned. But as we move towards the conference of the parties later in the UK this year and beyond, I think ESG focus will become more central to strategy in banking, and lawyers supporting ESG initiatives will become far more in demand across all aspects of finance. I strongly believe that sustainable finance will become the future of banking, actually, and there will be an increasing demand for lawyers supporting ESG across a wide range of financial services. And banks are becoming more long-term in their focus, driven by a range of this stakeholder activism. And I think that ultimately the industry needs to embrace the fact that all finance really needs to be sustainable as the ultimate objective. I think lawyers will find themselves slap bang in the middle of that evolution.
Yeah, I mean, huge topic. I could probably spend about half a day on each of those topics. I think the topics I heard Andrew in there were move towards sustainable finance. Interestingly, and I think I'd agree with this, ESG being mainstream within financial services. I wonder whether that's, from a historic compliance requirement and then this integration of ESG within strategy. And you talked about profit and purpose, and ESG becoming part of a business's purpose, whether that is the next stage in the evolution. But it certainly seems to me that there's effectively a social responsibility on the financial services industry, having led on this for a while, to continue to lead and to teach larger corporates, other businesses, smaller players that are looking for finance, are looking for different ways of funding actually their move to a more ESG compliant environment, to work with the financial services industry and for the financial services industry to role model that. Alexis, I can see you nodding away, and I know from our conversation you're passionate particularly about the opportunity, and again Andrew talked about that risk opportunity balance, the opportunity for the smaller finance businesses to really emerge from this and use this as part of a differentiator. And I just wondered whether you wanted to add anything to that conversation just around that, how integral this is to financial performance and stakeholder management.
Yeah, thanks. Again, I'll just echo everyone else's sentiments. Thank you to the lawyer and to Kat and team for having me talk on this, and also having the small guy come, or girl, and come and join, because one thing I really want to emphasize is that ESG may once have been the preserve of listed companies and the big institutions, and it is, you know, as Andrew said, the future of banking, but it's the future of finance. It's the future of fintech. I mean, you look at what fintechs are, all the fintechs popping up now is purely centered on ESG. So, you know, fintech funds, platforms, connectors for simply ESG focused businesses and assets. And I think it's here to stay. You know, I think previously it may have been seen as a bit of a tick box exercise. There's no way it can be seen as that anymore in a post-pandemic, post-Black Lives Matter world. So, you know, as a privately held smaller business, ESG is becoming increasingly important to us. Look, as I said, our purpose has always been around inclusive finance. So, you know, we offer a product which is targeted at the kinds of small SMEs, small, medium-sized businesses that struggle to get finance from banks because they don't fit those kind of standardized affordability assessments, etc. But what we're seeing is there's so much more emphasis on a market that we already kind of cornered. And you know, you go down even to sort of RFPs that we're part of, and one of the top questions is, what's your approach to ESG? So we're not talking about just large institutions anymore. This is something important at every level, to every financial services player. And, you know, as I mentioned previously, it's a competitive advantage to be able to say you take ESG seriously. I completely agree with Andrew on the S. I think the S is going to be absolutely fundamental in the post-pandemic world, the social side. And, you know, there are large segments of society that have been precluded from finance, for example, due to socioeconomic factors. And I think both regulators and the financial services industry as a whole will have to pay attention to that and make changes there. So yeah, I think it's the thing of the future, not just for the institutions and the listed companies and the banks, but for all of us, for anyone in financial services.
That's great, Alexis, thank you. We're sort of straight into our next topic, but just to finish off the financial performance piece, I was actually having a look at some research that had been done by a number of banks, and Goldman Sachs, Morgan Stanley, Bank of America within the cohort that had done that, which has really demonstrated that those businesses that have integrated the ESG principles into their purpose rather than as a compliance requirement are outperforming in the market, are generating better sales growth, and are actually getting better return on equity and investment capital. So, you know, just I think the evidence is there if we weren't convinced that this is critical and it's coming. And I agree, both sustainable and inclusive finance is certainly post-pandemic going to be a real thing on the agenda. Alexis, we were going to have a quick talk, but I think you've kind of moved into that conversation around how you could use ESG proactively to mitigate risk, but predominantly to enhance the market position and promote brand reputation. And you've started to talk to that. We're seeing companies becoming more and more transparent in data disclosure and using that to evidence their commitment to an ESG agenda, to inclusion and diversity, particularly as a recruiting tool from a social agenda point of view, as you were saying. You know, some of the big players, PwC, Microsoft, Netflix, they're making a big play about this. But your point, I think, is this social agenda is the smaller players need to get on board with it too, and can absolutely make an advantage out of that. Anything more you would want to say on that topic?
I think it's a brand positioning point. I mean, if you you know, as I've said before, I sound awful now saying it, you know, I constantly say it's not just the moral and ethical side, because that's super important, right? But on the commercial side, if you have a brand that isn't endorsing ESG values, you're going to struggle. You're going to struggle to motivate employees. Employees are millennials increasingly looking to work for organizations that are purpose-driven. And your brand in the market with customers, again, they are looking for products and services that are that are steeped in ESG values.
Yeah, brilliant.
Yeah,
Thank
and
you.
it's a little bit.
I'll go on, Gordon. Yeah, sorry.
I was just going to jump in. I mean, it's a little bit, hopefully, of a virtuous circle, right? Because as Alexis says, I mean, if your customers, if that's what they want and that's what they believe in, that's going to drive your own sales and revenues, and that's going to make it easier to attract finance from, the banks and other institutions and private equity or whomever. So hopefully, once that focus is there at the SME level, it not only helps your own bottom line, but it gives you better access to finance, which, is what this is all about.
Another aspect would...
Sorry, go on, Timo.
Thank you. Another aspect would definitely be to avoid potentially catastrophic costs, which could entail a breach on integrity, which can sink a small and medium entity. A super tanker, if they have a corporate scandal, they just patch up their holes and then they're sink on. But in the age of global media and the court of public opinion, a miss on integrity can potentially sink a company. So this is not the head of moral philosophy speaking here, but ESG actually pays off, or you can monetize being good, doing things the right way. And this is why this is so powerful. This is clearly the presence of the future, focusing that to to meaningful and sustainable business. And I think it's all organizations are well advised to drive this deep down their strategy agenda as a key priority.
That's great, Timo. Thanks very much, and thank you, Gordon, as well for that, for your contribution. And I think one of the themes that kept popping up for me when I was having a think about this was just the need now to move from what I think is a very established commitment in the financial services industry to this agenda to that action, and helping businesses and the financial services institutions to do that. And I think lawyers are going to play, I think somebody mentioned that earlier on in the conversation, maybe Timo, actually it was you. I think lawyers are going to play a really important part in using their positions to accelerate this action, I think, across businesses, and help embed those ESG values into not only the governance process, but also, as we've talked about, the culture and the purpose and the meaning of business in that need to, to canter along, frankly, with the ESG agenda that's moving at pace. So just as our final conversation piece, just wanted to come to the that sort of wider question about how legal teams can support the business in preparing a sustainable operating model and prepare for the regulatory developments that we're going to see. And in particular in helping identify the opportunities and risks, I suppose, of climate change and the other social challenges. And I was going to probably just ask each of the panelists to give a few thoughts on that, on how the legal teams can help. And I can see we've got a couple of questions popped up. So perhaps if we zip round the panel first in response to kind of how the legal teams can help support this agenda. And then we'll go to the questions that have come through. So Timo, you're right front and centre of my screen. So why don't I start with you and your lovely smiling face?
Thank you so much, Victoria. You're much too kind. The role of the lawyer is, of course, the business partner, to be a strategic business partner, to be included in the meetings, to advise the business how to meet their transactional goals in a cost-efficient and commercially minded manner. But the more important goal is to be the protector of the company, to keep the company from harm. And this is where this plays in, what I just said, breaches on integrity, breaches on ESG, corporate hypocrisy may have catastrophic costs. In an age of global media, we just need to see what is going on social networks currently, or Google the words corporate scandal. And this is a chance for the lawyer to step up, to improve their role from the old Dr. No cost center chief blocking officer to be a really sustainability oriented business partner, to deserve a seat at the table and be included not only in legal discussions, but on strategy, budgetary, HR considerations as well. this is, I think, a great chance and also an opportunity. And the CEO is well advised to have a strong and independent partner on the legal side as the consultant, because the overall responsibility for the corporation is borne by the CEO. He's the top person, and he needs to implement that culture of compliance, that culture of sustainability. So he or she is well advised to seek help, and the help is there also in the form of the General Counsel.
Of the company, certainly right alongside the CEO. Andrew, do you want to go next with your thoughts?
Yeah, look, I mean, I completely agree with Timo. I think the role of lawyers across large corporates and financial institutions, and as Alexis said, across the industry generally, is evolving to become quite critical. I would kind of bucket it into three easy focus areas, if you want to call it that. The first would be strategy. As Timo alluded to, I think lawyers really have to sort of lean in and advise as we see evolving regulation. I mean, the horizon scanning going on around ESG is huge at the moment. And so, that is the feature in the strategic outlook of organizations. So strategic planning is key, and that's an evolving landscape in itself. I mean, we're seeing rules governing the movement of capital and trade and digitization and supply chains all evolving. And these are all linked. They all ultimately feed into ESG. In addition, you've got the whole planning towards net zero, which I think is fundamental to all organizations, but in particular to finance. And I think legal teams are centrally positioned and should be centrally positioned in that dialogue. The other is, of course, risk and governance. I think risk and governance, where legal typically sit, identifying the rules of the road, understanding what a green bond is, a green loan, a sustainability-linked loan, the evolution of soft law into hard law in the context of, say, human rights. All of this is evolving to become a real focus from a risk and governance perspective. And obviously, you've got the greenwashing aspect. So, whatever marketing is going on around, green products, that has to be vetted through a robust governance structure, and legal have to be at the center of that. And if they're not, I would highly recommend that you put yourself at the center of that table. And the other, of course, is the transactional, which is kind of the bread and butter of many of the lawyers that sit in-house in banking. So that goes to all kind of product evolution in relation to transactional activity. So yes, I think those would be the key aspects I would highlight from a legal coverage perspective.
That's great, Andrew. And Alexis and Gordon, I'm not wanting to shut you off, but we've got a few questions come through. So I'm going to go with those first, and then perhaps just circle back round to the two of you just to make sure we can get through the handful of questions we've got. And the first question is quite a broad question. So how has COVID affected your sustainability agenda? So, and there's a couple on that. There's a couple on the impact of COVID. A, has it affected the sustainability agenda? And B, sort of the social element, what practical steps have we taken to monitor health and safety of employees, in particular, obviously the ever-present mental health issues that we're all experiencing throughout the organisations. So I don't know, maybe Gordon, do you want to just talk about COVID and any effect on the sustainability agenda?
Sure.
From your point of view?
So I think, and I think maybe Alexis mentioned this earlier, but I think it's accelerated it, frankly, right? I mean, I think a lot of the realities that we've had to face with being, unable to travel and sort of stuck at home means that, we're kind of realizing, well, you don't really need to travel for a meeting. Just, you don't have to take a 3-hour flight for a 2-hour meeting and then fly 3 hours back. And certainly, in investment banking, I can tell you that's what a lot of us spent a lot of time doing. And so I think, as we were sort of forced to adapt to this unusual situation, people have realized, well, you can be efficient and you can do a lot of this work without having to, expend a huge amount of carbon, for example. So that's one part of it. And then I think the other piece is, and I think you mentioned, the mental health aspect. That is a massive focus for us now. And I think it's true across all the all the large financial institutions, because, you know, professional services is a grind, and I think that's true whether you're a lawyer or a banker or an accountant or whatever. And I think we've sort of come to realize a bit better how difficult it can be, especially for young people who are getting started in the industry, or, you know, people coming from different backgrounds, all that kind of stuff. So I think it's accelerated it, and it's really honed people's focus, which I think is a good thing.
Great.
I think exactly as Gordon says, you know, the mental health side of things is a really tricky one, because, you know, when you have everyone working from home, and actually the demarcation between home and work is sort of gone, and work creeps into every hour of the day. And it's also difficult to just have a chat with someone, right? And to check up on them and see if they're doing okay. So I think organizations have almost been forced into introducing measures, which is a good thing, actually, to monitor and make sure that people's mental health is okay. So, you know, we've introduced a tool via Slack called Spill, which is a kind of online counseling type service. And it's really important that, you know, we're making sure that people aren't just going unnoticed if they're struggling, because it's so easy to do in this kind of virtual world.
Yeah, okay, that's great, Alexis. I'm conscious of time. There are a couple of questions, I think, just if we could cover these quite quickly, really around ESG for choosing external providers. So how important is that? And also a situation where do we foresee potential disputes where ESG credentials have been overemphasized, e.g. claims from investors, shareholders, stakeholders. So I think the importance of it in choosing your people you work with, and also potential disputes if we overstate what we're doing. Yeah. Any thoughts on that? Maybe
I can comment. I can comment just briefly on the appointing external counsel. I think it's certainly a very important topic in the context of ESG. And just in relation to my own organization, appointing panel firms is becoming quite key in relation to seeing what firms are able to produce in relation to their own ESG strategy, their own net zero plans, because quite frankly, this is upon all of us rather than just the financial institutions. I think the legal fraternity needs to play its part in relation to adopting its own transition plans, in relation to, I would say, net zero in particular, but more generally in relation to how law firms can offer a sort of a wider ESG related service to corporates and financial institutions is getting a lot of focus.
Great, Andrew, thank you. And I think the thorny topic of potential disputes, we may have to park for another conversation. I mean, I think that's a big conversation, and certainly I think there will be there will be those sorts of claims on the horizon, because where there's change, there's always a claim, as my litigating background always taught me. I'm going to try and bring it to a close now by thanking, first of all, the panelists, thanking the people who've asked the questions, and all of you who've been listening to this conversation, which I found incredibly illuminating, and, you know, certainly doing my work with the team in preparation, you know, brought some real thoughts to me about our own organisation, how we can bring this more to life. The theme, driving purposeful change, I think we've heard about integrity, we've heard about sustainability, we've heard about inclusivity, and there's no doubt in my mind that ESG is now front and centre for all businesses, not just the financial service sector. The value creator that's evolving at pace, we kind of ignore it at our peril, and increasingly linked to financial performance, equity value and shareholder sentiment. And research showing the link to market research, market results and growth. We've brought out the S within the ESG, I think, in the conversation. I'm wholly endorsing that. We are absolutely post-pandemic, I think, on an S agenda, although that is not to put into the shade the environmental and the governance aspects of these strategies. I think the financial services industry is used to this agenda. It is grappling, though, with metrics and data, as we all are, and I think the lawyers can help lead on some of that agenda, and it's certainly, I think, going to be part of strategic planning, and with a real positive upside from a brand and reputational point of view. As I think I said earlier, I think we've got to move now from that commitment to action. The legal teams that are listening to this are, I think, front and center. I think it's a really interesting time for the GC CEO partnership, as the GC steps up, and I think, Andrew, could coin your phrase, as a partner, or Timo, sorry, as a partner to the business, and ensuring it fulfills its obligations in a legally and ethically sound way. And the lawyer needs a seat at the table in order to do that. So I think that's been a great conversation. Thank you to Alexis, to Gordon, to Timo, and to Andrew, and also to the lawyer for hosting this conversation and for allowing me to moderate such a deep thing. I think we could have gone on for hours. There's a wealth of knowledge around this table.